Some really quick, frequently asked questions we're going to go through because we're going to get right into Luke's story, which I think is exciting. Do I still own my crypto during the loan? Yes, you do. But technically, you've handed it to a third party. No different to a home loan or a car loan. You technically own it, but you've actually passed the asset to another individual under the terms and conditions. So it's no different to a home loan or a car loan. So exactly the same situation. Collateral held in cold storage. This is a little bit of an and/or. Some of your crypto will be held in cold storage, and so that which is held in cold storage would be insured. If it's not in cold storage, then it won't be insured. So you need to understand the difference. The reason that not all of it's in cold storage is really the next question. Is my crypto repothecated? Repothecated is a nasty word, but basically means, do they reuse your asset? Do they take your asset and then reuse it? Majority of underwriters will reuse your asset, and that's where it's not in cold storage. So the reason they're able to give you such great rates of 10% on an asset, which is still classed as quite risky, is because what they do is they take that underlying asset and then they will reinvest it, and they'll trade that in other markets. And so there is an underlying risk with that, but at the end of the day, the providers that we've done and chosen are all the top providers in the market. So these are the ones with the most collateral, the most asset backed, and are the ones that are really substantial in their compliance and the way in which we do it. So we don't have anyone on our panel which is a small provider which may have great rates, but doesn't have the gunpowder to be able to stand up in a downturning market. If the price of crypto goes down, obviously, in the margin call facility, you have to top up. In the event that you don't top up, then they'll close your position and you have lost your crypto. If the market goes up, you keep all of that asset. So all of your asset will be kept, and I'm about to show you a slide on how that works. So here is a practical account. This is how your account would look. And if I just go through this, you can see that the total value in this client's account is $52,000. This is US dollars. Down here, they've got a loan. So this loan originally, when it was taken out, was a $10,000 loan. So collateral has gone up. And so if you look at it, the loan outstanding is $1,250, or $11,250. That was the total loan account. So the interest at 12% on 1 year loan at 50% LTV was $1,250. So the balance is the $10,000. You can see though that because the market's moved in a positive since this client took the loan out, which was over only a month ago, their total collateral now is $22,000. So if they were to close out their loan today, okay, they would get half of their crypto back, and invent that cash, they wouldn't have to pay that cash back. So that's another way. And I leave all my loans for over 12 months and allow the market to really work those loans. So again, try not to do short loans like 1 month, unless you're a day trader or you've got some specific reason, but lock them in for a longer period, let the market do the work for you.